Another month, another video on the most bought stocks in the ASX this month that's just passed August in 2020. Now in this video, there's going to be a few areas, fields that might surprise you guys and that were never in there in the past couple of videos. So today I'm looking forward to explore this with a couple of you guys and explain and give some of my thoughts and what's been reported out there in the ASX. Now, if this is your first time watching one of these videos in my series, go check out the other ones, obviously after this video. But this list is from CommSec, so it doesn't consider in any of the other brokers. In saying that though, CommSec is Australia's largest broker with the most amount of trades, investors, and so it kind of shows what are the trends and what is being bought out there. And now before I continue with this video, obviously just smash the like button down there for the YouTube algorithm for me. That'd be greatly appreciated. If you haven't done so, also subscribe to the YouTube channel because, well, it's free. Yeah, that's a pretty good reason. It's free. Go ahead and do that for me and let's get into the very first area. So to start off, I'm going to touch on the most common, the biggest sector in Australia by far, which is the finance sector. Now here are all where the top 4 banks lie. And if you've been keeping up with the news, or at least with my videos, some of the banks have recently come out with their annual reports. And some indications have pointed out to some bad news that there, well, might be some more adjustments to mortgage repayments or people freezing their mortgages leading on. In contrast, however, due to the all-time low rate, what banks, in particular Commonwealth Bank, have seen is that due to the amount of loans being taken out, a lot of these banks have seen large profits still come on through, despite the whole rona situation. Now, I have a feeling the strong demand for home loans comes down to 2 factors. The first one is that people are still receiving money from the government, right? So the confidence in the market is good because people aren't freaking out about losing their jobs and whatnot, because a lot of people are actually receiving more from these government payouts than what they would have received otherwise just working full-time or part-time. And this money printing has of course allowed the economy to keep on going. And now the second factor to this is all the building grants that the federal government has given people, right? So that's $25,000 if you're looking to build a brand new home or renovate for $150,000 or over. That's a massive renovation. Now, from just my perspective in Brisbane, I've seen a lot of people snap up new lots of land and started building already. And, you know, I mean, a lot of these land sizes are rather small, 200 to 400 meters square. Like, you're paying a massive premium if you're going over 350, 400. So I've seen a lot of these lots go off like hotcakes. So I'm not surprised that massive demands for loans are coming through for the banks, which is making up for the lack of interest rates that they, well, had initially. And so given the current environment and situation, I think loans will continue to come. The banks will continue to benefit from this. And also, remember, it's still a fair bit higher than the cash rate, sitting at around 2 to 3%. Now, the next sector on this list is, of course, the travel stocks. Now, these guys have been the biggest highlight of this whole rona situation because, well, what's the one thing that stopped throughout this whole period? Pretty much travel. And because travel stopped, prices have taken a massive fall and people have been coming into the market taking a bet on that, well, it'll start back up again. But what we've seen is that, well, it's a little bit surprising that it's going to take a little bit longer than what people probably expect to start traveling. And I think sentiments are slowly starting to change. And remember, before all of this happened, the Australian leisure market for travel was already slowing down. You know, we've got Qantas reporting this type of stuff, Webjet, Flight Centre, they've all reported that the leisure market in Australia was already slowing down. But anyways, so where do our travel stocks still fall within this list? So we've got Qantas at number 17, Flight Centre at 12, and Webjet at 7. So out of the 3, Webjet is the only one that still falls within the top 10 most traded stocks. Now, if you've watched the other videos in this series, I've talked about so much about the travel stock. I really don't want to go into it any further. It is what it is. Like, we're just going to have to wait and, yeah, wait it out. But honestly, I don't see things picking back up until a vaccine comes out to boost people's confidence again. And, well, you know, you've got Qantas now also looking to sell some of their stuff, like their pajamas, to liquidate their items that they would normally give business class people. So, yeah. But I couldn't find any. I actually wanted to buy some. I couldn't personally find it. If anybody could give me the link down below to buy some, that would be great. I don't know if they're sold out at this point, but yeah, I couldn't find any. The next category on our list, of course, there's only been like really 3 big categories. So take a guess which one's the next one on our list. What's the next field, sector, whatever you want to call it. I'll give you 2 seconds. And at this point, you should have either got it right or you're really wrong. But it's the buy now, pay later sector. Woo! Let's go. Zip, you've got your Afterpay, you've got your Sezzle, OpenPay, and I'm probably missing one. Anyways, doesn't matter. So this category pretty much started with ZipPay and Afterpay being the 2 OGs of the buy now, pay later space in the ASX market anyways. This category has been on fire, given the shift from consumer debt, when we're shopping every day, just using our credit cards, over to this new form of payment. And it's not just been taken up in Australia. No. It's gone global with a lot of their market share coming from areas like the UK and the US. Now you can see in terms of order, we currently have EML at 20, APT at 10, and Zippy Dippy at 5. Zip being one of the biggest standouts given they've just recently signed a partnership with eBay, which I thought Afterpay was already with eBay. Anyways, doesn't matter. I hold a fair few Zip shares, so I'm happy that the share price has gone up. And I saw in the post that a few of you guys have benefited from it also. So claps all around. Good job, guys. Good job. With that being said, I still think there is a big headway of room of growth for Zip and a few of the other smaller payment companies as soon as they make some more partnerships. Like they still don't have a lot of domestic shops on their list. So there's a lot of expansion still to go and grow. And don't forget that they have a partnership that they recently signed over in the US as well. So that should pop off, hopefully. I don't know. The headquarters is in New York, which is pretty bad. So yes, without delving any more into the buy now, pay later sector, I think this area is still going to thrive. I mean, Afterpay is just going to do something crazy and the shares will go over $100, $110. Like it's a no-brainer. It will. Now this next one's an interesting one, and one, to be honest, I have no interest in at all, but it is on a list. And it's the Treasury wine estates. Now this stock has been on the list since there was a massive decline in share price as China looks to impose some hefty import duties on Australian wine exports. This of course comes from the escalation in tension between Australia and China, of which Australian wines make up 37% of the total value of wine imported into China. Now in its recent annual report, net profits were down as China was going through the whole rona situation, but they expected things to pick up as China slowly recovers, which saw the shares go up about 10% and then back down 17% or so, given the news about the heavy duties that were going to be imposed. Now, what we can see from this list is that there are a lot of buy orders. Now, given that there was a lot of buying that was done, that might suggest that a lot of investors were coming in, seeing that, the stock hasn't hit this price since 2016. And so, although whilst I personally have no inclination to buy this stock in the slightest, I don't really care about wine. I don't even drink wine in the first place. I think a lot of investors are seeing some great value in it. So yeah, have at it. Treasury wine estates on the top 10 list. Now the next stock on this list is, who would have guessed, but Australia's largest telco in Telstra. Now to be honest with you guys, I'm not sure why this is in the top 10 list. I mean, I don't see any urgency or why people are hyping up Telstra and looking to buy Telstra. But I have a feeling it's for 2 reasons. First is that the dividends are relatively safe. That's what the reports have to say anyways from Motley Fool, all that type of stuff. They always suggest Telstra just being Australia's largest telco. And number 2, I don't know if people are betting on 5G, NBN, which by the way, NBN's probably dragging like the profits down for Telstra. That's been like a nightmare, to say it in a nice way. Has not been good for the company at all. So I have a feeling it's 5G and for the safe dividends. That's probably what people are going for, given savings accounts are at an all-time low. So I don't know if people are looking for a lot of safety. Anyway, so Telstra is on the list. All right, we're now down to our last 3 stocks. Now this one was interesting because when I look at these last 3, I knew only one of them. I knew 2 and I didn't know the other one. But funnily enough, they all fall almost within the same criteria. And a few of them have gone up in share price for very similar reasons as well, which is not very common to have it done in this way anyways. Anyway, so stock number 3 on the list is called Hydrax. Now, to be honest with you guys, I've never heard of this company or stock before. So, to see them in the top 3 was a little bit surprising, and I had to do a little bit of digging, a little bit of research to find out that, well, basically, it's a penny stock. And it's had a climb of 400% jump based on the news that it has some successful implants of its Angel Med Guardian product, which basically gives people warnings on heart attacks. Now, more importantly, the product was approved by the FDA in the US. So that approval pretty much opens it to the biggest market in the world. Now, just in terms of biotech or any medical stocks, be wary with some of these stocks. You can be waiting for years and years and years and not see any significant growth because you're waiting on a lot of developments to come through. There's so many variables like funding and also regulations and a few other things that you've got to wait for to happen. There's also the investor expectations. Like if a good trial comes out and they kind of expected a bit more, share prices go down. And if a little news comes out, but it's still more than what they expected, well, then the prices go up drastically. And so I guess it's akin to penny stocks in general. But with biotech and medical stocks, you could be waiting around for a long, long time. And you might not ever see an extra dime in profit. You might lose money all along the way because they haven't found any significant research or they haven't found a way to scale it and make it profitable for the company. Now, finally, whilst we're on the topic of health and biotech and whatnot, the last two actually are in the very similar categories. They're both to do with health. One is Mesoblast and the other one is CSL. Now, looking at number 2 in Mesoblast, we have a regenerative medicine company that seeks to treat back pain, cardiovascular disease, and inflammatory ailments. In August, it took off about 40% higher based on good news and support with the FDA over in the US. I told you these stocks kind of have a couple of things in common, right? There you go. FDA, US. Apart from that, during this period, their revenue has doubled to 32 million USD, and according to the AFR, they are looking to launch a few new products, one of which involves trials with rona patients, which took them off ventilators successfully with a 75% rate. And it involved about 12 patients. So I don't know if sentiments around a vaccine, a cure, or anything like that's why it's shot the price up. It's probably why the price has shot up, let's be honest. But yeah, so they have held tests and it has to, do with healing, with people dealing with the current situation. I obviously know a lot about science, yes. But honestly, guys, there are a lot of scientific aspects, like when you read some of these reports and whatnot, that I'm just not familiar with and I don't have the time to try to understand. So yeah, Mesoblast at number 2. Good job, FDA. Now at number 1, we have CSL, probably one of the best blue chip companies you could probably invest in Australia. Now they came out with a 10% net profit after tax increase with their full year report at $2.1 billion USD. Now what's interesting about CSL is that it's not a online retailer or a buy now pay later who have benefited quite greatly from this whole rona situation. In fact, they're still doing research, they're still doing their thing. The only issue that they've run into is not being able to collect plasma because of this whole situation with lockdowns and whatnot, with all these government regulations in place. And so that's the really main issue they've come into. But in fact, they've actually made a solid profit and 10% profit after tax. That's incredible. For this time when everything is in lockdown, everything, a lot of people are unsure about things, that this company is still able to continue what they do. In saying that though, they do get a fair bit of government backing and whatnot, because I think they are still working on a vaccine for the whole rona. So yeah, we'll see where that kind of heads. Anyways, guys, that was the list for the most bought stocks in August. Now, do you own any of these stocks? Actually, did you buy any of these stocks in August itself? There were a couple of other stocks I didn't touch on in the top 20. I'll put the list here for about 3 seconds, 2, 1. Could have paused any time there to take a look at the stocks. The other ones there, a couple of milk stocks, whatever. If you made it this far in the video, leave your favorite fruit down in the comment section below to show your support. Apart from that, guys, I'll catch you guys later. Have a great rest of the week. Cheers.